Got it. Got it. Stop it there. All right, right on. All right, my friends. So we got Richard Vague with us from Center City, Philadelphia, and this is going to be awesome. So I came across Richard. And I don't know him from Adam. He doesn't know me, other than the 2 minutes we talked before this started recording here. He had written an article in Advisor Perspectives that said why government doesn't, why government debt and spending don't cause inflation. And I said, ooh, that's an article just up my alley because I actually agree with that. And so I was reading it and I said, man, I got to get this guy on a video because I just want to pick his brain. And Richard, you'll be I don't know if you followed the Advisor Perspectives article that you had put in there, but the comments it's just I don't know if you follow the comments or not, but I was just in there today and I was like, man, oh my goodness, it's a good time following these comments because everybody knows everything. Just ask them; they'll tell you how much they know. But this is a great read. Richard has just published a book called The Paradox of Debt, on top of other books he has published, and I can't. And I haven't read the books. I cannot wait to read them. So welcome, Richard. I'm much obliged for you being here, sir. Thank you.
Yeah, I'm so grateful that you would have me. Thank you.
Right on, man. And Richard's a native of Houston, so we won't hold that against him. But he finds himself in Center City, Pennsylvania. Did you start off, in the O and G business, or did you start off in finance and then went? I mean, how did you go from oil and gas and that energy into what you're doing now in big time finance?
Most of my career was in banking.
Okay.
And, we did that for a long time. And then we saw an opportunity in the energy space just because there was some deregulation going on, particularly in places like New York and Pennsylvania. And we thought kind of our own marketing skills might be applicable. So we got over and we did okay.
And did you, because of deregulation and PA, is that what brought you to Pennsylvania from Houston to get more boots on the ground?
No, actually, we came to Delaware in 1987 because banking regulations in Delaware were advantageous, and those were back in the days where you needed to move to take advantage of that.
Well, I remember I read your bio, First USA, and I said, man, I had a First USA credit card, man. Just FYI.
There were about 80 million of them, so I'm not surprised.
I made you rich, man. I made you rich.
Thank you. Did I not send you a thank you note?
Well, you're on the video, so that's what matters. So, all right, so you're in banking, and then you hung up your banking CEO boots, and you started doing like full-time research and stuff. And how did you come up? See, I'm a Friedmanite by default almost. I went to George Mason after I got out of the Army, studied economics at George Mason. And so, if you're familiar at all with the economics departments, George Mason is kind of like the libertarian Austrian school. And I always kind of, the Chicago school always kind of, I don't know, I just seemed like they thought they were all that in a bag of chips. I always just wondered that. Anyway, but I still like Milton Friedman. I got a signed Milton Friedman book, Free to Choose and all that, which I'm very proud of. But I was always under the auspices of inflation is always and everywhere a monetary phenomenon. And I believe that until basically, I'll never forget, in 2009 or I guess it was 2010, I remember working for USAA as a financial planner, and we had these 3 annuities, fixed annuities. One was a 2-year, one was a 5-year, and one was a 10-year. And the 10-year annuity was paying a guaranteed 6% rate of return. I remember telling everybody, I said, don't do that because the amount of government spending, inflation is going to go through the roof. You're going to have high interest rates. Don't lock up your money for 10 years at 6%. And lo and behold, never happened. We never got the inflation that was promised under the inflation is always and everywhere a monetary phenomenon. I just remember sitting there thinking, what the hell, man? This is part and parcel Friedmanite economics 100%. It's supposed to go up, inflation, and it didn't happen. And I started having a revisit of this. And then some guy on my YouTube channel said, you should read this book by Richard Koo, and The Holy Grail of Macroeconomics about Japan. I said, I was stunned. I was like, man. And so then I come across your thing and I'm like, government debt, because I've been saying this on my YouTube channel for about 4 to 5 years, government debt isn't what causes inflation. So if you don't mind, share with us, your take on that, because I got a lot I want to talk about that for sure.
Well, we have a lot of data that didn't exist when Milton Friedman was alive. Since his heyday in the 70s and early 80s, we have, 40 something years of data that I view as fairly critical. And really, we have a database of about 47, the 47 largest countries in the world that together constitute 91% of world GDP. And we have data going back 50 to 70 years on most of those. So it's a pretty easy exercise to go in and find every single instance of high government debt growth and see whether it was followed by inflation or not. And we did that exercise, and under the parameters we used, there were 30 such instances, and 7 of them were followed by high inflation. And that's not compelling. And furthermore, there have been lots of instances of high inflation that were not preceded by high government debt. So you have disproof going both ways. And we all know some of the bigger examples there.
Yeah.
Japan grew its government debt, exponentially after its 90s crisis, and its inflation was zero. The US, after the great financial crisis of 08, grew its government debt exponentially, and we had 2% inflation so the evidence simply isn't there.
But people still they think it is. I mean, that's what. So reading what you had mentioned, and I'm just going to quote you here. I thought it was incredible because just hold on a second. I'm going to find this quote. I said this. Why doesn't more people get this right here? This is from your democracy article you had written. Our exaggerated fear of inflation comes from the 70s and 80s, which is Friedman, you know what I'm saying? And the lady who wrote that book, Anna Schwartz, Friedman and Anna Schwartz. Our exaggerated fear of inflation comes from the 70s and 80s when OPEC had a tenfold increase in the price of oil. Inflation reached a 15% rate, and then interest rates climbed to close to 20. It was in this context that many economists made dire predictions about the likely consequences of high levels of money supply and government debt growth. They warned that higher government debt would constrain spending, crowding out lending investments, and blah, blah, blah. And it hasn't happened. And I'm just like, it hasn't happened. It didn't happen then because we have the tenfold increase in oil prices because of OPEC. It hasn't happened now. It hasn't had inflation. Now, they're always going to say Zimbabwe, they'll say Weimar Germany, and they'll say Iraq. And I'm like, oh, okay, well, we can use those as an examples. I mean,
I'm careful in my books to differentiate between large developed countries and small countries.
Yeah.
And in small countries, Zimbabwe is a great example of that. Yeah. You got some other things going on that is kind of plague of small countries. They have big trade deficits, and most importantly, they end up having to borrow in a foreign currency. So they have there's a lot of things going on in small countries that just don't apply to large developed countries. So to me, it's a separate phenomenon.
Yeah.
And by the way, my favorite part about the 70s was, you did have a tenfold increase in the price of oil. Oil was about $3.50 a barrel or thereabouts in 1972. It's almost $40 a barrel by 1979, and that was the Yom Kippur War and the Iranian Revolution. So it's as if our $90 a barrel oil today was $900 instead. Now, here's the interesting part. It was solved by, and I happen to live in Texas at this time, so I kind of saw this going on, a tripling of the amount of drilling rigs. Once Reagan deregulated the price of oil at the wellhead, because at that point in time, you couldn't sell U.S. oil. If you drilled it, you couldn't sell it at market prices. So nobody was drilling for oil in the United States. And Reagan, as he did in so many areas, deregulated it. And the oil exploration exploded. Drilling rigs went from about 1,500 drilling rigs to about 4,500 drilling rigs in about 3 or 4 years. The oil production in the United States and Canada increased by 25%. And by 1986, the inflation dropped to 2%. It was a function of the increased production of oil. The price of oil dropped from $36 a barrel to $10 a barrel because of the increased oil production. That's what saved us. And what's true that most folks haven't looked at is money supply and government debt growth in 1986 were still ultra high.
Yes, exactly. Right.
And inflation dropped to 2%.
That's what I mean. I actually, on the advisor perspectives thing, I showed a graph, a logged of the of M2 money supply from the Fed, the St. Louis Fed. I said the money supply, even the growth of the money supply, even in the 2020, isn't phenomenal relative to just the linear rate going back to Reagan times and all that too. I said, so you can't sit there and say this is what's causing this massive inflation. I mean, I guess you could do anything. I just like, it doesn't make sense. But we're so, I didn't know that about the oil rigs, because actually I always got respect for Jimmy Carter because he deregulated air travel, he deregulated trucking and stuff, and we see a massive decrease in ability for just middle class families to fly cross country. Like I couldn't afford to fly. My parents couldn't take a plane back in the '70s. Couldn't afford it. Come the '80s though, and all of a sudden the deregulation that happened under Carter. I didn't know that about oil. That's interesting. Is that what led to the speculation in Texas and Houston and whatnot that had a massive?
Absolutely. Everybody went crazy, and of course borrowed, to the hilt to do the drilling rigs and build the office buildings, and there was a huge crash in Texas.
You talk about this in your book by chance? The paradox?
Oh, yeah, a little bit for sure. Yeah, we give you those oil numbers right there in the book, in the Paradox of Debt.
Oh yeah, so Paradox of Debt. Where I'm going to promote the hell out of that. That's oh man, see, I didn't even know that. That's fantastic. That is interesting. So there was regulatory confines on oil drilling. Reagan got rid of that. All of a sudden, you had massive amounts of drills going out there, which decreased. I mean,
supply and demand worked.
That's crazy. And yet, I remember I had written a book myself right here. This I just self-published. This is Relax and Retire: Debunking Inflation Fears. And I talk about Carter deregulated things of that nature, and how it was so much easier, so much more middle class people could fly and whatnot. I had no clue about that. And I was talking about also too, like I use a comment from the BLS in 1956, how everyone was freaking out about inflation, even though inflation at that point is only 2%, whatnot. It's like this inflation is this forever boogeyman. And then everybody will say to me, well, man, it must be nice. Have you ever gone to buy a gallon of gas lately? And the irony of this all, Richard, you'll get a kick out of this. So the anti-library I was telling you about before we jumped on here, all those books that are looking at me, read me. I pulled Thomas Sowell one off, and out comes a receipt from when we used to live in Haddonfield of buying a tank of gas in New Jersey, and the price of gas was $303.69. And ironically, the price of gas here in Georgia is about $3.50, and that was from 10 years ago. So I hear all the time, just look at the price of gas, LSU inflation's here. I said, well, if that's true, then we're in deflation because my wages have gone up, but my price of gas has stayed the same relative to what it was 10 years ago. And going back to what you said about a barrel of gas, oil being $40, if we look at the same linear from 3 to 40, that'd be like $900 today. We're not anywhere near that. Why is it I don't know. Why is it the boogeyman that everyone wants so badly to be negative on this? It's weird to me, man. Like we're living. We'll talk about inequality in a second because I completely agree with that. But we're living so good, and yet everyone just seems to want to have this. It's bad. I don't understand it, man. It's any thoughts on that? I mean, we're living great. It's crazy.
Well, we are, particularly when we compare ourselves to the rest of the world. But I would say there are a lot of folks. When the Fed says that half the folks couldn't handle an unexpected $400 payment, that's really true. So if that group feels, has to spend even $50 or $75 more a month on gas, it's a big deal. So, and you're right, inflation only reached 9% very briefly last summer. It's down to 3.1% now. Might get up to 4%. That's still pretty low. In 1979, it was 15%. At the end of World War II, I think it touched 30% briefly. So we really, we're having some inflation now in the context of other inflation bouts. It's not that high.
Plus, and then you think about that's even CPI, and if we look at CPI, which OER, operate, owner's equivalent rent, which if you own your house, that's not applicable to, and transportation costs, which are buying and selling of a newer used vehicle, a newer used leased vehicle. That's not applicable to many people either. So I'm like, I don't know, the whole thing it's like we always have to have this boogeyman, the US dollar. Maybe it's not inflation, the boogie, it's a US dollar. Everyone's always down on the US dollar. The US dollar this because of Trump or because of Biden, it doesn't matter. I mean, Reagan or Clinton, it matters not. It's always the US dollar is a whipping boy. And I don't get it, especially when the dollar is strong as can be right now. I mean, my goodness, if you go up to Canada, I was doing a video on this morning. Our dollar versus a Canadian dollar is like, I don't know, it's like what our takes 80 cents of a US dollar to buy a dollar of Canadian or something. It's like a significant discount relative to our dollar. So you can go to Canada and buy the freaking country for $10, basically, is how cheap it is up there with the US dollar. Yet
well, we always lament our problems, and of course we've got problems, but once we start comparing ourselves to the rest of the world, we always look pretty good.
So on these 40, I think said 40 instances or 32 instances where money supply doubled in 5 years, we only had 7 or something like that, like 7 that had high inflation afterwards. And then we've had other, which is obviously not statistically relevant. Then we had other instances of high inflation without a doubling of the money supply. So what in Europe, so my mind is inflation is always and everywhere an energy phenomenon. That's what I've kind of come to realize. I don't want to put words in your mouth, but what do you think, Richard? Like, what causes inflation? I don't want to talk about Zimbabwe or Cuba. I just don't care. But what causes it for developed countries?
Well, I think you're pretty close. I would say inflation, even if we look back, we've studied inflation all the way back to the beginning of American history. We've only had 9 bouts of inflation in 250 years. And most of those related to a war. And we had it in the Civil War, we had it in World War I, we had it in World War II. And the issue there is obviously the destruction of supplies.
Yes.
So, wheat fields are destroyed, oil is constrained or overused or bombed out, so it really almost always relates to the constraint or destruction of supplies. And we had 2 big events relative to that led to our current inflation. One of those is very obviously COVID, where factory workers had to stay home. We had a constraint in supplies because folks just weren't building as much because they weren't going to work. And then we had the Ukraine war. So our current inflation has a lot more to do with the Ukraine war than it has to do with anything the Fed is doing. And, we blame the Fed and we focus on the Fed, but, it's a little bit troubling that 40 to 50 years later, after having been stung by OPEC, now being stung by Saudi Arabia and Russia, there's a little bit of shame on us that we haven't diversified our energy supply risk in 50 years.
Yeah, that's I wonder if Reagan didn't deregulate the oil wells. Because I think a lot of people forget that natural gas, we didn't know that there was going to be this abundance of natural gas back in this. I mean, I was born in 1970, so this is before my time, but I've certainly studied it. And we did not have an abundance of natural gas the way we do now, and et cetera. That's why we went back to coal. I just wonder, like, if we didn't deregulate the oil wells, it's interesting to we don't have to ponder that. I always wonder, like, if we always want to bash Carter.
It'd have gotten real ugly if we hadn't done that.
That's kind of what I'm thinking. But it's weird too, because everyone thinks Reagan. I like Reagan. I can call him the guy, but he wasn't the spark. Is Carter and Kennedy that started the deregulation? I just don't understand why. It's always political. It drives me crazy. But I mean, it's just
it didn't last that long. Remember, the guy who put it in place was Nixon.
Yes, exactly.
And that was just like 71, 72 kind of thing. So the deregulation of oil didn't last that long. It lasted long enough for us to cede control of pricing to OPEC, though.
Wait, you said Nixon put the price rate, the regulations? Yeah, I see, man. Really, Nixon did. That's interesting.
Nixon was Mr. Solve inflation with price control.
Yeah.
We had modest inflation in the late 60s, and here's why we had inflation in the late. It never got up past like 6%. but it was viewed as kind of like now, it's viewed as
Right.
very problematic. What happened was we were still trying to defend the gold standard.
Yeah.
We had 20,000 metric tons of gold in the United States in 1970 or 1960. By the time you get to 1970, it was down to 10,000 metric tons.
Wait, it went from how much to how much?
It was cut by half, about 20,000 to 10,000, because it was pretty simple. Since we fixed the price at $36 an ounce, anybody that wanted to could just buy gold from, redeem their dollars for gold here and go overseas and sell that same gold for $100 or $200. So we were trying to defend the gold standard, aggressively. And as we did that, the dollar sank, all sorts of things happened. Our inflation went up somewhat.
Right.
We raised interest rates somewhat as part of that. And then kind of in the last desperate hours, Nixon started putting in price controls, which kind of is the last resort of some politicians for inflation. Of course, that didn't work. Price controls never work, or if they do, they work for a few months and then they don't work anymore.
Oh man.
So it was Nixon's regime of price controls that were kind of what put us in the corner, and Carter and Reagan got rid of those.
And I always knew about the wage and price controls from Nixon. I didn't know about the I didn't know about the oil, and then frankly, I kind of knew about the gold. Trying to defend the price. I didn't realize it was cut in half, which the arbitrage is so mind-bogglingly obvious. And you could take it to Monaco and buy it for $36 and turn. And that's the hero of the right. That's crazy. It's so crazy to me. That's nuts, man. So that on top of the OPEC. And then we get Reagan and Carter, and then we get George Mitchell for the hydraulic fracturing and stuff. That led to massive abundance of cheap energy, and now it's like and now we got another war because of Russia, Ukraine, and whatnot. And regardless of it doesn't matter. It's just it's scarce. It's always about scarcity. It's weird, man. It's always about you. Like, there's a book called Ersatz of the Confederacy, and this is by this woman who writes. He kind of took some notes on various diaries of other people during the Civil War, and just these people had nothing, and because there's no supply. I mean, there's inherently, Sherman, there's no supply, and so no matter how many Confederate dollars you had, it mattered not, because you could not buy anything. In fact, even in my book, I talk about, you could buy a pound of ground chuck in 1913 in Maine, where I'm from, for like 13 cents a pound. There's no ground chuck to be found. So even though the purchasing power of the dollar has declined significantly, well, there's no ground chuck to buy. Even if you had $2, there wasn't anything to buy there. What do you think? Like, what do you think about, like, is there? Because I do follow the MMT people, the Stephanie Kelton. I don't subscribe to modern monetary theory per se, but I'm intrigued by the debate on that. Are you familiar with MMT, modern monetary theory? Right. So is there a limit to how much government can spend? And I don't have an answer to this. I'd just like to hear your thoughts, because I don't know. Like, so if we have, $2 trillion deficit and not much is happening, and because I don't think much is happening because of government spending. In fact, I want to talk about another quote you had in here, which I just think was fantastic, man. Let's just say the government took on a $5 trillion deficit. What would be the impetus where the government spending then starts creating some massive inflation? Any thoughts on that by chance?
Well, it's not going to start inflation, as we've just discussed. But let's talk about the pandemic, because it's a pretty good place to look. In the pandemic, government debt increased, and I'm talking 20, 21, and 22.
Right.
Government debt increased by $8 trillion. Household wealth in that same period increased by $30 trillion. That's because when government spends money, it doesn't disappear.
Yes.
It goes into household checking accounts. So if the government's spending money, households are getting wealthier. And that's not just true in the pandemic. Let's take that same, kind of Reagan took office period.
Yeah.
1981, household wealth. Well, let's talk about debt first.
Yeah.
1981, total debt in the economy, government and private, is 125%. Today, it's 260%. It's more than double. In 1981, household wealth was about 350% of GDP. Today, it's 600% of GDP. An increase in wealth and in debt has always led to an increase in household wealth for the reason we just said. Government spending goes into household checking accounts, and the flood of new money pushes up stock and real estate values.
Yeah.
Voila. And let's put the government debt in perspective here for a sec. The government's debt is $32 trillion. Household wealth is $150 trillion.
Yeah, what I'm saying.
If the government's debt was zero, household wealth would be 120 trillion. You could just subtract that right out of the wealth of households.
Yeah, so but that would be inflationary, right? Because the household wealth is being created to buy,
You and I have just talked about the fact that, that's been going on now for 43 years.
Yeah,
and inflation has been around 2% for most of that time.
So that would show you that the stimulus of a government spending, if I have more money in my checking account, it doesn't mean there's too much money chasing too few goods, except if we have a supply issue, like not enough housing being built or
it's very simple to know whether there's excess spending occurring. All you have to do is look at GDP itself. GDP itself right now is a little over 25 trillion, which is almost exactly where it would have been if there'd never been a pandemic. So our spending never, ever exceeded the trend line it was already on, which is growth of about 2 or 3% a year. There never was a point where we had, excess spending. What we did have was supply depletion.
Well, how would you know if you have excess spending? How would you know that?
Think of GDP this way.
Yeah.
GDP is just a measure of spending. That's all GDP is. GDP is consumer spending plus business spending plus government spending equals GDP, plus or minus exports, net exports.
Yeah, but if GDP is 26 trillion, then would 28 trillion be excess GDP? Like, what would make it be excess as opposed to normal? I guess what I'm trying
Well, it'd be pretty easy to look at. You just look at what it is versus its trend line, and if the trend had been 2 or 3%, and all of a sudden it was 10%, that'd be excess. That never happens.
So right now, because I remember in one of your articles you had said we are, like you said, we are on the trend line where we were in 2019 if there was no pandemic.
That's right.
So the government spending has increased wealth, almost like a factor, like 5 to 1, it seems like. No, I don't want to be on the record saying if government spends $1, we're going to have, because obviously that's going.
It's at least 1 to 1, and it's usually 2 to 3 or 3 to 1.
Okay, 3 to 1. There you go. Now that does pose a problem, though. Going back to those people, the people who are on the lower end of things, because they might not own a home, they might not own equity markets.
It's a huge problem. Oh. And I define it this way. We just talked a minute ago that household wealth was 150 trillion.
Yeah.
70 to 80% of that wealth is just two things: stocks and real estate.
Exactly what I'm saying. Yeah.
And the top 10% of the population owns 65% of all the stocks and real estate in the United States. The bottom 60%, the bottom 60%, which is the middle class and below, only owns 14% of all the real estate and stocks in the country. So it is a mathematical certainty that as real estate and stock values increase, all that benefit goes to the wealthiest, and inequality widens or increases through time. That is the story of Western developed economies over the last 50 to 70 years.
So if government spending goes to increase the asset base, and the asset base is predominantly owned by the top 10%, then inherently, logically, government spending increases the wealth and inequality. Would you not? Right?
Exactly.
So what? So then what does I hate to say what does the government do because it scares me like, oh, I'm not one, but you can't have, so let me back up a little bit. I actually think, Richard, that there should be a wealth tax that should go solely to raise the Social Security benefits. That's what I think. And that, people think I'm a socialist. I don't care. I think at the end of the day, you should tax the wealthy because we've been privatizing profits and socializing risk for so long that you tax. And I know the wealthy, I get all that. I get so progressive. I get all that. But there is an estate tax. I get all that 100%. However, the Social Security is the bread and butter, right, of a significant portion of hardworking Americans. I mean, you get Social Security because you actually worked, you did labor. I just wonder if the government spending is actually going into the coffers of the wealthier. And I'm part of that group in the top 10% in terms of income, maybe not in assets, but certainly in terms of income. I probably am in assets too. And you said we're going to have, and I don't think a wealth tax on, just a guy owning a deli, but I mean, if you're, I hate to say it, if you're a hedge fund manager making 20 million bucks a year, you probably pay a little bit, whatever. I don't know. But I mean, and you use that money to prop up Social Security and Medicare or something like that. That would seem to me to be good use of money as opposed to just government spending on, various things that we've already identified will go to the wealthier people anyway, if that makes sense. You following that logic by chance? Does that make any sense at all?
Absolutely. And really there aren't, the problems aren't that complicated.
Yeah.
The issues are pretty straightforward and you've summarized them, I think, fairly perfectly. And, there's only a few levers to pull to reverse that trend or to even moderate that trend. And one of them is tax policy.
And then everyone's going to call you socialist, and the Republicans will never get nominated if they say, "Oh, we want to raise taxes." And you're like, "Really?" Because the ultra rich aren't Republicans, generally speaking. But that is a frustrating point of mine because, frankly, the base of the Republican Party, you don't have to volunteer politics here, but the base of the Republican Party is you working white people. You know what I'm saying? That's what it is. You can't deny that. And working white people don't have a lot of liquidity in terms of assets or real estate. They got a little bit, and then never mind, black people. It's a political win for me from the right, but no one ever wants to hear that. It's nuts. Anyway, we don't have to comment on that. It's very, very frustrating. It's like, dude, you have the opportunity right there. Just but so if they did that, if that would increase government spending potentially, but that would increase government spending with a directed benefit towards the lower, would reduce inequality, which would, I just think personally, is my own opinion, I just think that makes sense from a moral perspective. You can't have everyone up here, and I recognize that there are people that come and go in the top 1%. I get all that, but you do have a lot of wealth that's passed down generationally. That's a fact. I mean, the Rockefellers aren't poor even after all these years, and at some point just seems to me to be better to bring up the bottom. So talk about your Jubilee. I'd like to hear more about it. I know I don't want to keep you here all night, but I want to hear about your thoughts on the Jubilee because this is very interesting to me. You got a couple more minutes?
I'm happy to. Here's the raw facts of the matter. Debt in every economy more or less always increases through time. So we used the statistic a moment ago. In 1980, debt in the US, total debt, business, personal plus government, was 125% of GDP. Today it's 260% of GDP. As sure as we're sitting here, in a few years it's going to be 280%, 300%. Japan's at 400%. So the one thing that is certain is that aggregate debt in every economic system increases through time. So if you weren't a political animal, and if you instead were an engineer, it's as if you were, an engineer and you looked at an engine, and the longer that engine ran, the higher the temperature got. You would introduce systems to bring equilibrium. It would be exhaust systems, cooling systems. You'd do something structural to deal with that. My argument is whether you like it or not, and whether you're irrespective of what your politics are, it is ultimately not a good thing and will ultimately very much of a bigger problem if debt in our economic system continues to increase. It's not an emergency for tomorrow. It's not an emergency for a year from now, but over the next decade or two or three, it's going to be a big problem. And it's particularly on the private debt side.
Yes, exactly.
So if you were an engineer, you'd begin to introduce small structural places to bleed off the excess heat in the system. And that's where I come from. I'm not trying to, make some political statement. And, you do it in places like, mortgage debt. You'd let mortgage debt holders have an easier way to work out their underwater mortgages with their lenders. And one way to do that, by the way, would be to allow some kind of debt to equity swap. I get a lower principal on my mortgage, lower mortgage payments, if I give you 25% of the gain when I sell it here in a few years. That's something we could make happen. We'd have to facilitate it with some changes in some lending regulations to make it more feasible. That's a way to just take a little pressure out of the system. I think bankruptcy laws could be liberalized a little bit. Now, I'm a career lender, so I know from once I speak, having,
especially credit cards, man.
I know bankruptcy intimately, but as a general matter, getting folks back onto their feet should be, you either rehabilitate them or you punish them. And I'm more in the camp of let's rehabilitate them than punish them. I've put forward an idea where student debt, students could get some relief on their debt if they did, a substantial amount of community service. So there's ways at the margin to begin to kind of bleed off debt out of the system and bring us more into an equilibrium.
Yeah, 100%. Looking back at you can't write off student loans in bankruptcy, from what the Pension Protection Act or something like that from 2000. I mean, you talk about that's just that's bad. They need to reform that.
It's small wonder that it's out of control with that kind of a loan.
100%.
If lender doesn't have to be cautious, they won't be cautious.
Again, socialize the risk and privatize the profits, man. I mean, just think the credit card companies would love that. I mean, given your own background, I used to be a small business banker too, and looking at the stuff, and it's funny. The business people always have two books, one for the banks and one for the IRS. You know what I'm talking about, and the one for the IRS always looked a lot different than one when they're trying to get a loan. That's for sure. Then when you had to get the loan back, all of a sudden poverty. You're like, wait a second.
When you're in a business, when you're in a bank, you prepare three sets of books. You prepare GAAP accounting. You prepare what's called RAP accounting, which is regulatory accounting, which is only seen by your regulators. And then you do tax accounting. There's three different sets of books.
So your book, what's your book on Jubilee called again?
It's called The Case for a Debt Jubilee.
Okay, cool. And
but the concepts are contained in the Paradox of Debt. So if you want a shortcut way to deal with it, just read Paradox of Debt.
That's good stuff, Rich. I'm much obliged for being here. And we got a YouTube channel, Tychos, Tychos. Is that how you say it? Tychos?
Tychosgroup.org, and we have a weekly economic video that's about 5 minutes in length that just comments on, makes data-oriented comments on recent trends.
Love the video he just did about economic headlines gone awry. I forgot what it's titled, but I said, man, so I talk about that all the time about we're all dying, bye. And you're like, well, if you actually read the article, like it didn't really say that, but okay. And then
this is the one where they say, child poverty doubled.
Right.
Well, it's still below where it was 3 years ago. So.
And you had made a point in that video about we have I forgot what you said, but so perfectly, we have short-term, whatever it was. I said, because you looked in 2013, child poverty is up here, 2021 or 23 is down here. But because it was down here in 2020, it's doubled. You're like, yeah, but we're still 50% below where we were 10 years ago. Come on.
Everybody extrapolates the most recent data point, assumes it'll go on forever. You need a larger context.
Hey, good stuff. And I appreciate you being here, Richard. People can find you at richardvague.com as well, if memory serves. All right. And this is good stuff, Richard. Hang tight. I'm gonna hold on just a second. I'm gonna get off here. So, folks, I'm gonna put all the links to Richard's stuff in here. Hold on just a sec, Richard.